My beautiful friends, here we are together again at last, and we have a lot to talk about because I can promise you this freak show, and I mean that. I'm going to talk about a bunch of things here that they call the market, that we hear from this character and that character. Well, we're going to put a little light on that in my newest segment right here of Markets a Look Ahead. Let's talk about the freak show a little bit. I'm not trying to be funny. It is a freak show. What happened towards the end of last week? A couple of things that are very noteworthy and give you and I a big clue as to where markets will more than likely go starting tomorrow. Okay. So what happened? Number one, we get the same routine. It's kind of like a comedy act or a sidewalk act or some kind of thing with the Federal Reserve. When we get this increased volatility that we've been seeing in the market, I covered what volatility really means in a video that I did last week. If you have not seen it, just go to my lovely YouTube page and watch that. Anyway, so we got the same gag from the Federal Reserve as the market, gets to this point where we get this volatility and the market's dropping, people get fearful. Every single time we see this, without exception, they think we're that dumb that we don't notice these things, but we're not that dumb. They play good cop, bad cop. They get one Federal Reserve president to come out and say one thing, real dovish. Then they get another freak to come out and say, well, hold on a minute here. And they sound kind of hawkish. It's the same charade that they do every single time. And again, you and I, we're not that dumb. We pay attention to these things and we know. What else happened this week? Well, we got another story floated out by President Trump himself, explaining that, China wants to come to the negotiation table regarding trade wars. So look at the setup here. Federal Reserve, good cop, bad cop. Stories being floated out, true or not, in an attempt to, give this market some kind of confidence or a boost to move higher. Because that's all they are concerned with. Nothing else matters here. What's really going on around the world geopolitically doesn't matter because most people in America here are kept in the box. As long as they're kept in the box, they'll keep throwing money into this market. Now let's talk about a couple of other things. We got the U.S. 10-year yield now 3.06 and the dollar that got decimated. Why did the dollar get decimated? Well, that was the good cop from the Fed, Richard Clarida, I think the freak's name is, and that, immediately squashed the dollar. Now, if you noticed, when the other freak came out, the hawkish freak from the Fed, the dollar did not rebound. So the market is believing the first freak, you understand? That the Fed is going to have to, back off here, not be so aggressive raising rates, because this has all been a ploy to inflate the stock market. And it continues. Again, 10-year yield suppressed, dollar falling, opens a doorway for cash to flow into the stock market. You all know that. We're going to go look at a few charts in a minute, but what I want to do real quick is explain to you this week. Thursday is Thanksgiving. The market is closed. Friday is a shortened trading day. I just want to give you all a heads up on that. So what we are going to do right now, you and me, we're going to have all kinds of fun. I hope you're ready for it. In the description of this video is a link which will take you to my website. I want you to go to my website, watch this video on my website, and we're going to go over some charts together, and we're going to talk about it. I love this part. Anyway, click on that link, go over there. If you're on my website, let's get started. I'm going to open it up right now. First things first, okay? I did make a few changes here I want to go over with you right over here real-time most active gaining and losing stocks. This is a nice tool for all of you to use. This is real-time. If you're looking to maybe do some scalping in this market, for you traders, you know exactly what I'm talking about. I think this is important. You can look at the most active, the top gainers, and the top losers. Take advantage of that. Okay. Now, we are going to scroll all the way down to the bottom of this lovely page. All the way down. Center, right here. Let's go over this. I like to start off with this. Technical analysis for SPY, the ETF that tracks the S&P 500. We have a weak buy signal here. Now let's look deeper into this. 6 sell signals, 9 neutrals, and 13 buys. You got that? While we're down here, okay, look right over here to the US dollar bullish ETF. A lot of pressure on that dollar. This is stock market positive. You all know that. However, let's also keep in mind the dollar has been in a pretty substantial uptrend for a while. Why? Geopolitical events. The knee-jerk reaction into the dollar is always the same. While we're looking at this lovely chart of the dollar bullish ETF, let's go right above that. Scroll up a little bit. Let's look at the bond market. Watch the bond market. Oh my God. You want to talk about off the Richter scale? Bond buying? Well, there it is. This is what's pushed that 10-year yield lower. Remember, when cash goes into the bond market, I know this seems confusing, the yield drops. Okay? It's like an inverse relationship here. Very important. Now let's look dead center of this page at my trading chart. Again, this is set up for SPY, the ETF that tracks the S&P 500. You know, last Sunday when I looked at this, I should have paid more attention to the red candlestick that developed there. Okay, nothing really major happened. We did have some increased volatility in the market. You know this guy sitting here? I couldn't care less because I trade credit spreads. Doesn't matter. You all know that 7 of my spreads expired Friday. All of them. I got to keep one lovely 100% of the premium. You know, speaking of that, just look right over here. Right next to this, you see all my newest or my updated positions, credit spreads. That's what I'm in right now. Let me address this real quick. This is a weird week trading. I'm not sure I'm going to be adding to any of these positions this week. We'll see. I got one position, as you can see. That's actually two spreads on Microsoft that are expiring Friday. They are so far out of the money right now. I guarantee you, well, pretty much, that unless something really bad happens, I will be collecting or keeping 100% of the premium on both of these spreads on Microsoft. I have a spread here on Apple, as you can see, which expires on the 30th of this month. And if you go all the way to the bottom of that list, I have Pfizer expiring December 7th. So I'm not even worried about those right now. My only concern is what's expiring this week. And like I said, we're so far away. I can't imagine something happening that's going to cost me a dime. More than likely, it'll be a good week for me. So let's look at this chart again. Trading chart here, SPY. Okay, we got a green candlestick here all the way to the right. We're still in those bands. You see those blue bands there? We're below the center. Granted, this is somewhat of a bearish sign, but I'm not convinced it's going to be a bearish week. It depends, again, on good cop, bad cop, which they're going to do if there's problems. More stories, fake or not, floated out about China trade. So that's going to drive the markets. There's no doubt about it. Keep in mind, U.S. 10-year yield 3.06 opens that doorway for cash to go straight into the stock market. You know that. So sick. Let's go to where it says SPY. We're going to put in GLD, paper derivative of gold. I want you to have a look at this. Very bullish, although this is not real. It's the paper gold does not exist. It's not on the elemental chart. Although, the real asset derives value from the derivative. Does that make any sense from you? The real asset derives value from the derivative. No, That's not the way it's supposed to work, but that is the way it is here in this fake reality. Let's do SLV. SLV, enter. Same kind of thing. It's amazing how a derivative drives the price of the actual asset. How does that work? You know, it's an interesting concept to ponder. All right, now, before I let all of you go, let's talk about cryptocurrencies, because I got so much email about cryptocurrencies and the pounding that occurred this week. Again, I don't follow these things, people, to the degree I used to. I don't hold them anymore. I'm an equity derivative trader. That's what I'm good at least I think I am. So for now, I don't, people are asking me, this is the question, Greg, is it time to buy cryptocurrencies? Let me just say this right now. I'm not buying them. All right. If that gives you any kind of an inkling, and that's only because I cannot value these assets. I've lost my ability to do that. When Wall Street got their hands on the Bitcoin futures, I lost my ability to value these things. Before that, I did pretty darn good, you have to admit. I wrote articles about it, I did videos about it, and guess what? They all played out to be 100% correct. In this environment now, I have no idea. So, anyway, I'm going to stick to, again, what I'm good at. That is trading equity derivatives, credit spreads. Beautiful thing. I can't stress that enough. Anyway, with that said, my beautiful friends, I'm going to let you all go. We will be together tomorrow, and I love being together with you, and it's going to be all kinds of fun, all kinds of lovely. Looking very forward to it. Let's see what happens. See you in the morning.